one
Okay.
more look at the disclaimer. All right, you can take over the screen, D.
Yep. All right. Let me share my
I know
screen.
Rob's going to want to see the click steps to get to wherever you're going.
Okay. Yeah. So let's look at there are a couple ways to answer the question was, well, if we, I- can we look back into history and see how a stock performs after a particular event like earnings? So like say, the earnings were announced, the stock, had this initial reaction to that news and got repriced based on the new information that was made available. And what tended to happen, the following week or day or 2 weeks, um, uh, coming out of that event. Um, so there are a couple ways to do it. Um, One is we have this report that is already kind of preset, and I'll show you that one. So let's go to Nvidia over here. Let's say we click on Nvidia, and on this page, you could see a menu to the left-hand side, and under earnings, we're going to look at earnings moves right here. Click on that. And then we'll get this initial report, and I'm going to close this page. I'm sorry, close this menu to expand the screen. And now what we have is this table, okay, with on the left-hand side, historical earnings dates for NVIDIA. Okay, so you could see here, and this table is already preset, so it goes back 12 quarters, so like 3 years of data. And on each of these historical earnings dates, it looks at the performance of NVIDIA from different reference points, different starting points to different ending points. You can see here how the stock behaved leading into earnings. So this is what did the stock tend to do, or how did traders or whatever, what happened prior to the announcement? How did the stock behave? Then, of course, we look at the day of earnings, and we could track that from different perspectives, and then after earnings. And here you could see that what we do is we're tracking it, at least in this table. We have a preset starting 2 weeks before earnings, heading right up to the close right before earnings. Okay, that's what this is doing. Looking for a 2 week performance, and then we could look at a 1 week performance, 3 day, 2 day, 1 day, and we get these summary stats below. So this is a table showing you for each of those periods, observations, and then the summary statistics. Okay, so we're going to come to this after earnings and look at this table just to see what kind of insights we could get, how the stock tended to behave. And this here after earnings is looking at the tracking the performance of the stock as of the closing price after reporting earnings, right? So that's going to say, okay, reported earnings, had a full days of trading, and then the stock closed at a certain price. So that would be our starting point to track the performance. And then it goes to the end of day based on, the next day, 1 day, 2 days, 3 days, or over 2 weeks. So the starting point would be the close. For example, 2 weeks would be the closing price after reporting earnings to the closing price 2 weeks later. Okay. And this allows us to kind of take a look at the distribution of returns from a historical perspective. So here you could see on a 1 day, one-day basis, it looks like it's close to 50-50. 45% of the time it was higher, 55% lower. So very close to, I would say 50-50 here. Keep in mind, we're only looking at 12 observations as well, because we don't have earnings only happen 4 times a year in the stock. And on average, it's shown that the stock was down 0.5%. So it kind of gives us an indication that there was probably a skew a little bit towards the downside. So what I'm seeing, just looking at these one-day performance and looking at the eyeballing, I see like one day was down 9.2% the following day. What about the volatility, or how much it could potentially move up or down the next day? What type of volatility did it see the next day? Because perhaps the next day you still could see, does all the news get reflected and kind of like just sits close to that closing price, or do you see more volatility getting repriced and moving around? So that's what this absolute average move is. It's taking all the up moves, all the down moves, right? All these, it's converting them to positive values, and then taking the average of those observations to see the magnitude of the move in either direction. Doesn't matter, up or down. We just want to know how far away from the closing price has it moved historically. And that here is telling us 3.2% up or down. That's the average. So of course, when we have an average, like the next question is, well, how much variability is it around the average? Right? Because you could get to an average of 3.2%, but in many different ways. Every observation could be 3.2%, and you'll get an average of 3.2%. Or you could get, a very big move to the upside and very big move to the downside, and then the average of that could be 3.2%. So we need to kind of figure out, well, how much, we see volatility 3.2%, but how much variability is it around there? So one way we could look at, we could get a standard deviation around it, or we could just take a look at the ranges, just the range around from the lowest move to the highest move, right? So what is the highest move? Well, that was 9.2%. That's this one. See, it was down 9.2%. What about the lowest move? Well, that's 0.4%. That would be up here, 0.4%. So what this indicates to us is that it does seem like there's the average volatility could be significant, another 3% move, right? So let's see, yesterday moved down 6.4%. Potentially, the averages are about 3.4, but even that, we could see that from a historical perspective, the range of distributions is wide. We had almost an unchanged, and then we had one up or down 9.2%, but definitely a significant move. So that's something to keep in mind, especially, you're doing your strategy. If you're doing one for, a one day after earnings announcement, and you're trying to, take a historical perspective and try to assess your potential rewards and risks. There's a lot of variability even around that average. What about the median move? So the median move is if we took all these observations. So we have all these observations for a one-day move. And let's just say we sorted it from highs to lows. And then we looked right in the middle of the observations and said, well, what is the number where half of them were below and half of them were above? And this is showing a negative 1.6%, which indicate, which makes sense because there was more. 55% of the observations were lower. So there's a historically a slightly more bearish bias, but again, it's not a lot of observations. Might not even be that statistically significant, but that's just the biases so far from this data. And if we looked at our data set, so we have this particular data set, and we wanted to look at the extreme moves, and we wanted to compare the extreme move to the upside, the extreme move to the downside. How did that look, right, the day after? So here it's shown that so far, in our data set, the largest move to the upside was a positive 5.4%. The largest move to the downside was negative 9.2%. And that shows that, at least from the perspective the day after, that it was less liquid to the downside than to the upside. That at least from those two numbers, right? Those two numbers indicate that, that the move to the downside, the extreme move to the downside, was more significant, like noticeably more significant than the move to the upside. So that's looking at, the 1 day move. We could compare a 2 day, 3 day, and then 2 weeks, and then get these stats. So if you're looking at a 2-week horizon, right? We've got a 2-week horizon. How did the stock tend to behave? Well, over that period, it did slightly better to the upside. Positive performance exceeded negative performance, 55% versus 45%, with an average gain of 1.2. And how much volatility over that 2-week period? How much did it move, on average away from that last closing price? That's 7.5% up or down, with a high move of 21.9 and a low move of 0.9%. Didn't move that far away over 2 weeks. So those are significant too. You got, 21% move away versus barely almost on chain 0.9%. And this is the median move. Remember, half of the observations were above this, half below. And then the best move, 18% up over 2-week period, down 21.9. So this kind of gives us a preset of statistics just to compare in a table. If you wanted to use these historical data points, right, just not expand it beyond this, but just use the ones that are in this table, but you wanted to change the date and range, right? Just change the range, then you have this custom range here. Okay, so this tool in particular doesn't let you expand beyond the time, the number of observations. So the number of observations here is fixed on this table, but it allows you to do a custom change or range based on the date range. So let's say we were really looking at, I don't know, let's look at this here. What if we wanted to do 1 day after to 4 days, right? So we could enter it here, set the range, and now we have 1 day after to 4 days. And now this in this last column will produce the statistics for that date range. Okay, so that would be using this particular table to quickly just, get an idea of the distribution of returns around earnings, using obviously the observations that we have listed here on the left-hand side. Now, I'm just going to quickly kind of go to just move away from here for a second. I don't have a lot more time, but if you go under stocks and you go to price action analysis, right? So now I'm on a different page for this price action analysis. And if we wanted to put in, for example, Nvda in here and change this to, let's say, catalyst event intervals, a catalyst event, which one of them would be earnings, right? So here we get a little bit more flexibility. We could expand the number of years. So let's say we wanted to go 10 years of data, and we wanted to see statistics for 5 days before earnings, and let's just say the day before. So right before the earnings were closed. But now I expanded to 10 years. So I'm going to get the results. And now I got these new stats. 55% of the observations were higher, 45% lower. This is the average of all the up moves. This is the average of all the moves. This is the median. Here, this is the average of only the up moves. These are the average of only the down moves. So you could kind of compare, when it was up, on average, how much was it up? When it was down, on average, how much it was down? The largest moves up and down, given these constraints, right? Given these conditions that I listed above. This is a chart or graph of each of those moves. And then you get some more stats below, but I don't want to get too much into them, because we already covered one tool. So just wanted to show you another way to analyze that, that type of around the distribution of returns around earnings that way. All right, well, so I think I'll stop there.
All right, D, that was great. Thanks so much. Let me just make sure we don't have any nope, no questions. Everyone says thanks. Awesome job, team. As always, everyone have a great trading day and a great weekend. We'll see you on Monday, D.
Great. Yep. Thanks, everyone. Have a great trading day and a great weekend. And see Tuesdays. And are we off Monday?
Oh my God, it's Labor Day. Everyone get their labor in.
Yep.
Get your rest. All right, D. Good job. So remember, it's a 3-day weekend. Everyone, no trading on Monday.
Yep.
A lot of decay